Hello aspirants and welcome again to Legacy IAS Academy. In this video, we will be discussing about the anomalous behavior with respect to the gold and the silver prices. So now, as we all know that the prices of these precious metal, for example, the prices of gold has been increasing considerably since the last couple of years. In fact, in the last 1 year, it has become almost double, and the prices of both gold and silver have skyrocketed. They have reached their highest levels, but subsequently what has happened is they have plummeted as well. That means after reaching a very high level, higher than ever before, it has gone down as well. So we will try to understand first as to what are the reasons for the soaring of the prices of these two precious metals, and subsequently what has led them to slide down as well. At the same time, we will look at what does the future hold for gold and silver. So let's get started with the video. So the news is about gold and silver both reaching record high prices after strong rallies. Strong rallies means a strong continuous increase in the price is what is meant by a rally. Now, this is fine. We'll see the reasons for that. But subsequent to this, what has happened is there has been a sharp correction. Now, this correction is very sharp. Of course, whenever the prices go up, they sort of correct a bit. But here, this correction is also quite sharp over here. So that is there. Now, if you talk about the quantum of this correction, which generally if the correction is there, it will be 0.5, 1, 2%, but we are seeing a sharp correction wherein gold has gone down by 10%, and on the other hand, silver down by almost 30%, so 20 or approximately 28%. Now, we need to understand that silver is more vulnerable, or you can say the prices of silver is fluctuates more than the gold as such when you talk about the percentage fluctuation. However, interestingly, you will see that if the prices of gold is going up, generally the prices of silver also goes up. When the prices of gold goes down, generally the prices of silver also goes down. So this is the news which is all about. Now let us have an understanding as to why all this is happening. So first things first, what is the importance of these precious metals? See, these precious metals act as a store value, a store of value. They act as safe haven assets. Now, safe haven assets means assets that are safer, the risk wherein the risks are lesser. Safer as compared to what? For example, your stock market, your shares, your mutual funds, your bonds, etc. Now, all these things, these are not physical assets as such. They do not have intrinsic value as such, but metals do have an intrinsic value, and they act as safe havens, especially at the time of economic instability or economic instability, right? As a result of which they are preferred by the investors, especially when the confidence in other instruments are going down. So you still have money to invest. Where do you invest? You invest in gold and silver, which acts as the stores of wealth for the people. Now let us understand what are the drivers of this increase in the price of gold and silver. So as I said, as we have seen that they act as safe havens, so they will act as safe haven even more when there is economic uncertainty. So there is high global inflation in the market, rising sovereign debts are there, right? Because of which economic uncertainty is there, as a result of which more people would want to invest in this. Second is the geopolitical tensions. Geopolitical tensions, for example, the wars, the conflicts, all those things, the tariff war, the trade war, the physical war, the bombings that is going on, the conflicts that is going on, Israel's bombing on the Gaza Strip, Iran's bombing of Israel, then USA's bombing on Iran, and then Ukraine-Russia conflict. All these things are nothing but geopolitical tensions, as a result of which you would not be wanting to be invested in various countries and their companies wherein the situation is so uncertain. So what do you do then? You would then again want to be buying more gold. Then you have the concept of weakening of US dollars. Now whenever the US dollar weakens, that means the value of the dollar is going down. So you would not be wanting to hold dollar or invest in dollar. When this goes down, the gold strengthens. So again, you would want to strengthen in gold. Then you have policy unpredictability. In fact, this year's economic survey has also mentioned about this. Policy unpredictability means, see, economic policies should be estimated with the help of economic figures, but what economic survey is now saying is that the world's economic policy is not being driven only up with the economic numbers or by that. In fact, it is majorly being driven by the geopolitical relations that the countries have with each other, which creates uncertainty of the policy as well. Now, next is the major purchases that is being taking place by the central banks. So the central banks of the world, including our own central bank, is buying more of gold. Now, why are they buying more of gold? To diversify the foreign exchange basket. India's foreign exchange basket consists of the foreign currency notes, monetary gold, SDR, that is special drawing rights, and RTF, that is the reserve tranche facility. Now we don't want to be having all our eggs in one basket, as a result of which our foreign currency notes, which constitutes majority of our foreign exchange, we want to diversify. Even in that foreign currency notes, dollar holds the highest amount, so we want to lower our dependence on that, as a result of which RBI also has started buying the gold. So gold held by RBI as of September 2025 is over 880 tons, and if you look just 2 years back, it was 790. So about 100 tons of increase in the gold that is being held by our RBI. And very interestingly, if you look at it, this entire gold is divided into two: gold that is in fact three: gold that is with BOE and BIS, gold that is held domestically, that means this gold is in India, and these are gold deposits, which is a small amount. The important thing here is the gold that is held by BOE and BIS. What is this? This BOE is Bank of England and BIS is the Bank of International Settlement. Now, we had more than half of our gold with these two, but India has continuously started reducing its gold deposits or gold it holds in Bank of England and Bank of International Settlement, and now we have only 290 tons of gold, and more gold is now being stored domestically, and further this is going to happen. Now let us look at the statistics of the run up, that means the statistics of this increase. So gold is trading nearly at $5,595 per ounce. 1 ounce is approximately 28 grams. Now, as I said, this is at an all-time high, and silver around $122 per ounce. This is also an all-time high. If you talk about the yearly performance, gold, as I mentioned, has doubled in the cost, whereas silver has a fourfold increase. But one interesting thing that I wanted to show you is the trend of gold and silver prices from 1960 to 2025. You can see when there is increase in the price of the increase in the price of the gold, there is increase in the price of the silver as well. There is another increase in gold, another increase in silver, again increase in gold, increase in silver. The proportions may be different, the extremity or the degree would be different, but the nature of the graph is quite similar, especially when you see sudden surges in the prices of gold it leads to surges in the prices of silver as well. Now, the question is, if they were increasing, then why did the prices fall? The very first thing is profit taking. For example, as we said that the price of gold has doubled in the last 2 years. So if it was 75,000 in last year, now it's 1.5 lakh. You want to sell it, take the profit and move out of the market. So that is what it is. Second is the changing market expectations. So what is happening is, for example, in the US Federal Reserve, now Kevin Walsh has been nominated to head the US Federal Reserve, who is known for his conventional tactics. So now there will come a more certainty in the US market as well. Then the slight improvement in the geopolitical situations, wherein intermediation is taking place, diplomatic negotiations is happening, so more stability is coming, and stronger US dollars. So people would be wanting to invest in dollars, as a result of which, because of all these factors, the prices are now going down. But if you talk about the future outlook, there are experts who are still saying that it will keep on increasing. There has been a downfall, but it will keep on increasing, and by the end of the year, the price of gold can be $6,300 per ounce by the end of 2026. Right. Now, what is its relevance for India? Now, India is one of the largest consumers and importers of gold. Right. So, of course, the change in price affects Indian economy. It has the impact on trade deficit because we are an importer. So, if the prices are high, we will have to spend more foreign exchange for importing it. Hence, it also will influence our rupee exchange rate as well. And these price volatility affects our jewelry market, even the consumer. It affects investment as well as inflation perception is all that will be affected by this prices. However, though it has fallen down, remember the forecast is that it will still increase and reach $6,300 per ounce, and 1 ounce, as I said, is approximately 28 grams. So let us see now this. Based on this, we have understood that one relationship you should know is, when the stock markets are down, when the shares, mutual funds are down, people would want to invest in gold, which leads to increase in the prices. So they are sort of inversely proportional to each other. Thank you.